Hello there. Thanks for tuning in, and I hope your trading is going well. Today, we're going to look at how to prevent yourself from trying to pick a top when the odds are not in your favor. It's quite a good time to be looking at this because the Nasdaq and S&P are screaming to new all-time highs pretty much every day. And we've got Powell on deck in about 40 minutes at Jackson Hole. And there's an expectation that he's going to give some forward guidance that may be bullish for the market. I reckon that's all priced in, and we've got a decent chance that we're going to get a pullback. And I think that the bears are going to jump on that and think that is the big top that's already in. There's plenty of things that's going on underneath the market that we can look at that tells us that it's not a high probability setup to short this. Yes, the market might crash after Powell. Who knows what's going to happen? However, there's some things that we can look at to tell us that it's not the right time right now to be looking at this kind of trade. And then we can also flip it, and when we think there's another trade setting up like this, when things are really extended, then we can look back at these indicators and see if this time around it is a good setup. So without further ado, let's have a look around the markets. Okay, so for a bit of context, we've got the Nasdaq here, and this is it before the US Open today on what is the day today? The 27th of August. And yeah, so the Nasdaq, it's so easy to get sucked into just looking at most recent price action, especially after it's been quite an active little year. But if we look back, we can see that there was this big correction at the dot-com bubble, and then it came down again in the financial crisis, and it's basically been in an uptrend since 2000, late 2008, start of 2009. So that's where the Nasdaq is. So if you want to take a suicide short on the Nasdaq, then we're looking at this here and thinking, well, maybe it's just not a good index to look at shorts, and maybe you should be looking for an Aussie yen short if you think that things are going to go risk off. However, that is the Nasdaq, and there are plenty of people trying to short it right now. So if we look at here, I've got the CoinFin platform on, which is great to kind of have a bunch of different stuff to look at all at the same time. And we have the US index Russell's 2K versus the S&P 500. So that is small cap versus large cap. And the small cap, they are affected more about with a weakening economy. So that's quite a good thing to look at, the Russell 2K versus large caps, to see when it starts peeling off. And we can see here that it has actually started moving down here. So this is since the start of August. This is the daily charts here. So we've had a little bit of pullback on the Russell 2K, and if this bull run is to continue, we really want to see this push up rather than keep moving down here. That's a decent indication that there's some underlying weakness in the market. Secondly, we have the copper miners versus gold miners, and then we've also got copper versus gold as well here. They give similar signals, but I quite like to have both of them up because sometimes they are a little bit different. So again, they are showing a bit more strength, I would say, compared to the Russell 2K. But they're not powering away to the upside, and we can see here how this has made a slight new high, but really it's been pretty flat for most of the summer here. And the gold copper ratio, or copper gold ratio, sorry, has topped out here. And so again, there is a little bit of weakness being shown here, but things are moving up here, and we're in no rush to jump into this short. Really, if these were moving down, showing a similar kind of slope like that, then that would make a short on equities, or maybe a short Aussie yen, a little bit more attractive. And similarly here, so this is the industrial sector versus utilities. So industrials do well when the economy is doing well, in theory, and utilities should perform better when the economy's doing worse, just because utilities are things that we need to keep going, and industrials are more when new things are being produced. So again, we can see here, and the industrials were underperforming until the March lows, and they bounced up, and they're looking pretty strong here, actually. So that's certainly not adding to our short thesis. And at the bottom here, we've got yields for high yield corporate bonds. And so again, if we look at what happened here, it happened in tandem with the sell-off here. However, you can see that the rate of change for yields was really slowing down at the start of the year. And then it obviously went sky high here. And that is, people are expecting more yield to pay for riskier assets effectively. So here we can see, because the Fed have said they'll buy everything, that yields are just heading way lower here. There's no bottoming out. It's just moving straight down. So this might all change today, but right now we just know from looking at this that we're not really going to be looking for short in equities, or we don't really want to go long yen. So that's a rough guide to some of the indicators that we can look at. If you draw these up and then look back to what they do in the months leading up to a sell-off, then it gives you an indication of how reliable this is. They're not always going to give the same kind of view of the market, but they are, when they're all lining up, then that's a good sign that something is unhealthy is happening underneath the market. And so then we can start looking at some actual charts to trade. We've got oil here. So oil made a little break up here, and it's not really moving that far, but this is something that we want to see, because it's had some clear consolidation here, and in this environment, for the risk on to continue, we want it to be pushing up properly out of this area, and making new highs into September. So it's one area to keep an eye on. Copper, similar kind of thing to oil, is that we've had a consolidation flag here, and then a breakout. It's had a retracement, and now it's pushing up higher. So a similar kind of setup here. Aussie yen, again, we've got an ascending triangle that's trying to break out of here. And this is an interesting time to have some context, because we've gone into Jackson Hole, we're going into Powell, and it's trying to break out here. Now, if we don't have all of our framework that we're starting from here, we may look at a big sell-off of a percentage or two in Aussie yen as a really bearish signal, and we may look to jump on that. But if we keep in mind the whole context that we've got our framework in looking at the market, then really actually a sell-off over the next few days or weeks down to bounce here might just give us a nice opportunity to buy at this area for the proper breakout to happen. So keep an eye on that one. There's massive upside on a lot of yen pairs here, so this is like a key one to get right. If it falls away, then fine, and it might give us a short setup as well. But if this breaks out to the upside, then we've got a really big amount of space to move up. Euro yen as well, quite similar to Aussie yen. It's got loads of open space up here. So when a trade looks beautiful like this, what quite often happens is it does fall down and give us a short, but it's another area to look at. Here it's broken out, it's come back down. This was a flag, and it gave us a nice little buy here because, as I've said, we just had a bullish tilt to the whole market anyway. Here it is struggling a little bit, so this is one key area to watch after Powell today to see if this breakout fails. If we are to get some continued bullishness, then we want to see commodities start performing a bit better. And although oil has bounced and commodity indexes have come up off the floor, they're certainly not performing like the US stock market is. So what we want is to see areas that rely on commodities to start performing a lot better, start outperforming compared to the US equity market. Here we have an ETF of the South African equities, and we can see it's gapped up here, but it's just sitting around. We really want to see that breaking up. Similar here with Latin America, it's looking pretty weak actually. And again, in this kind of environment with lots of people expecting inflation around the corner and a commodity bull market to take off, we really want to see this start to push up as well. So these are some indicators that we should look at to see if things do start to fall away here. Then we look back at our original indicators and think, right, is this setting up for a short instead? This is the Brazilian ETF, similar kind of idea. And then if we look at the currencies of these areas as well, something interesting, quite interesting is happening here. We've got the commodity index here, which at this point here, it obviously sold off really heavily, and the dollar really gained. This is against the Brazilian real, but you can see it against the rand as well. That is the Colombian peso and the Chilean peso as well, all very similar kind of patterns. And so the important thing that's happened here is we had the big sell-off and the reverse of the USD big strength here. And then it bottomed out and the USD started to weaken. However, what's happened here in all of these currency pairs that are commodity currencies, the USD has started to strengthen a little bit, as well as the commodity index has continued to push up. So what we would really expect here is continued weakness in the dollar. So this is a little red flag, and it's something to keep an eye on as well over the next day, and because we've got Jackson Hole, and also over the next few weeks as we head into the end of the year. So I'm undecided really. I've not got any massive convictions in longs, but I would far rather be setting aside here than trying to take a suicide short on the Nasdaq. I hope you got something out of that, and I hope you can incorporate some of that into some of your trading to give you a better chance of calling tops if you want to at the right time rather than at the wrong time. Thank you, and have a great trading week.